Is the dollar really weak? That's the question. We're going to take a look at three currencies, the GBPUSD, the EURUSD, and the USDJPY. And we're going to look at some algorithmically generated entry prices for Monday morning. Let's take a look at the technical analysis of the GBPUSD. We're going to use monthly charts for all of these. The red is a 20-month moving average. The green is a 5-month moving average. And the question is the dollar weak against the pound? Well, here's a 200-month, I'm sorry, these are months, 200-month moving average up here in blue, 20-month in red, and a 5-month in green. Let's take a look here. We can't even squeeze it in here. So this currency, the GBPUSD has been in a bear market since all the way back here June 14th against the dollar. You can look across here, and let's just pick this right here, 1.17, and now this week closed at 1.18. I don't think that's strong against the dollar. Let's take a look more recently. Since June of 21 was around 1.42 and closed today, this Friday, the 11th of November, at 1.18. I don't think that's strong against the dollar. So I think we've pretty well firmly established that the pound is not strong against the dollar. Let's go to the euro and pull that up and see. Maybe the euro is different. Let's see what that says. So if we take a look at the euro, this is the euro, and this is a monthly chart against the dollar. That's EURUSD against the USD, the United States dollar. And again, 200-month moving average right here. And we can see that back in January of 21, we were at roughly 1.23 euros to the dollar. And today we closed at 1.03. It doesn't sound like the euro is strong against the dollar to me. You can see that is significantly below the average that it's been trading all the way back since 2017, which is 1.14. And again, it closed today at 1.03 on Friday, the 11th of November. Let's take a look at the yen. USDJPY. Monthly chart of the dollar, US dollar versus Japanese yen, and the question is the dollar weak against the yen? Well, let's take a look. The monthly chart shows us that all the way back here in June of 2011, May of 2011, 77 yen would get you a dollar. Today, it takes 138 yen to get you a dollar. So clearly, the U.S. dollar is not weak by any standards going back any reasonable period of time. Even just since January 2021, you could get a dollar for 103 yen. Today it costs you 138 yen. So there's just absolutely no question that the dollar is not weak against the three major currencies. Let's take a look real quick because it's interesting to look at our proxy for the SP 500, which is the mini futures contract. SP 500 E-mini futures contract. Let's take a look at this. What's going on and what's bothering people is you're getting this monthly chart. You're getting a breakdown below the 20-month moving average, and you can see right here the price is closed above the 5-month moving average today. This is again the 11th of November. So what does that really mean? What it means is they've raised interest rates. That's what it means. They've collapsed interest rates and the stock market sold off. That's all it means. It doesn't mean the dollar's weak. When you raise interest rates, you strengthen the United States currency against the majors around the world, and you weaken the stock market. Why would people take risk in the stock market when they can move their money into interest rates and get a guaranteed return? So in the short run, with uncertainty, that's exactly what they're going to do. They're going to shift to currencies. They're going to shift out of the stock market until they see what's happening. You can clearly see on a monthly chart, we're sideways across here at 39.70. Let's call it 4,000. It doesn't make any difference. We're sideways from all the way back in May in the stock market. Wow, that coincides right around where they started tightening. So at the end of the day, this is all interest rate noise through here. And admittedly, it's very loud noise. There's no question they've raised interest rates close to 4%. But this has nothing to do with a weak dollar against foreign currencies and has everything to do with Fed policy. There's nothing the matter with any of it. I'm not judging it. I'm just trying to explain it as best I can. At the end of the day, the dollar is ridiculously strong against foreign currencies because our interest rates are so much higher than foreign currency interest rates. They're selling those currencies and buying the dollar. And as long as that interest rate differential stays as significant as it is, in some cases almost 4%, you're going to get them selling the foreign currencies and buying the dollar. You're also going to continue to get uncertainty in the stock market. You'll notice this isn't a trend. If we go to the weekly, we're looking at SP 500. That's not a trend on a weekly chart. This is essentially sideways on a weekly chart. You're not going to get out of this until Fed policy for interest rates becomes clear. And once it does, then you'll continue to either move up or down. And we're at an inflection point right now. We're right here, close to 4,000. And once people get an idea what's going to happen, if interest rates are going to stay high, they're going to sell this off. If interest rates are going to move lower, they're going to buy the S&P. And of course, the S&P just is a function of the market as a whole. So that's all that's going on. Interest rate uncertainty is what's making the market look the way it looks on an aggregate basis with the S&P. And interest rate policy is what's giving us a very, very strong dollar. There's a lot of other reasons, but in the short term, low interest rates abroad and high interest rates in the United States means strong dollar, weak foreign currencies. So that's where it is. I don't believe the U.S. dollar is weak at all. I think it's very strong. I expect it to stay strong as long as the Fed keeps the rates up. And that's where we are today for November 11th, 2022. You can get access to all of our currency algorithmically generated entry prices every day. Let me find them here for you. They are the major currency pairs right here, put out every day by rbamresearch.com Monday through Friday. This is for Monday the 14th. You get them all on a free trial, 1, 2, 5, 10, and 20 days for all the majors: the euro, the yen, the Aussie dollar, the British pound against the Canadian dollar, against the Swiss franc, and the New Zealand dollar against the U.S. dollar. Buys or shorts every morning before 7 a.m. You can come in the morning, the evening before, after 6 p.m. and get them early, usually all at rbamresearch.com. Sign up. There's a link in the description below. We cover 190 stocks, the major forex pairs, and the most liquid futures contracts. No credit card required. You get a free access and a free trial period by following that link and putting in your email address. You get instant access. Keep in mind, everything you've seen and heard on here is for entertainment purposes only. Can't use our entry prices or commentary for anything other than entertainment. You definitely trade at your own risk, and you should always do your own analysis. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment for us, we'd love to hear it in the comment section below.